Alrighty, welcome back to the Dividend Hero channel. We're here to start our journey for 2026. Hope everybody's excited. Before we get started, I just want to quickly say, please note that investing involves significant risk and the information provided is for educational purposes only and not financial, legal, tax, or any other kind of advice. It is crucial to conduct your own thorough due diligence before making any investment decisions. Alright, let's get started. So looking at the market today, it is currently 10:22 a.m. on January 5th. We're going to enter some short put positions, just sell some cash secured puts to generate some income for this week. Ultimately, we're looking at anything for cash secured puts that is currently trending downwards. So you can see here some of our favorites: Broadcom, Apple, CLS, Celestica. They're all kind of trending downwards. STX, Seagate Technologies, Uber, also trending downwards, so we can maybe diversify there. Verizon and AT&T are going to be hitting their dividend dates pretty soon, so we're going to take a look at those as well in case we can capture some dividends for some passive income and also some option premiums for this week as well. All right, coming over to our dividend tracker, we can see that today there's a couple going ex-dividends, JP Morgan and Morrow. We're not going to be able to capture as much dividends. We could capture, buy these 100 shares and sell covered calls on them, depending on how they're doing. It just depends on how we're feeling that week about that stock. Ultimately, we did track Verizon and AT&T over here. We like those telecom plays. They pay consistent dividends that are above average, so something to think about there. For looking down further down the road, we see AVGO going ex-dividend, something we can think about doing there. Usually I like selling Monday or buying dividends that are going ex-dividend on Monday, because then I can sell covered calls against them a lot easier and cash secured puts first if I wanted to. But so far there's nothing really like standing out. LTC we like, but just nothing really standing out as far as something that's going to be an exceptional dividend play. So we're going to continue with our cash secured puts for our AI stocks. Alright, real quick, we are here with Verizon, so we're going to go ahead and sell a covered call on this. We have 100 shares that we just purchased at about $40.15, so it's already trending a little bit down, but I think we're going to go ahead and sell a covered call here at the strike price that we bought it at, so we can get that dividend premium and continue compounding with a little bit of options premium as well. So let's go ahead and just sell calls here. We're going to do our weekly thing that we like to do. But in this case, we're going to go to after the dividend. That's what this D stands for, ex-dividend date of January 12th. So let's go ahead and get to January 16th. Right, and we bought it at the 40.15 strike, so we're going to go to probably the 41.5 strike. Not a lot, but again, it's not going to be something that we're too worried about. Ultimately, it's going to help us get the exact thing that we need. All right, let's go ahead and set this up. Verizon $39.95. We've got calls and puts that we're going to sell to open. Quantity is going to be 1. Call 41.50 strike. We could wait till the price is a little bit higher, or at least it's on an uptrend, so we don't get locked out of premium. But ultimately, for the purposes of this video, I'm happy with just collecting the dividends and making sure that I'm selling a covered call on this particular entity. Hopefully it gets to this strike. If not, we're going to dollar cost average it and continue to compound that way. Now everything looks good to go. Preview this. $3.80. And it looks like we are good to go. We're received. Filled at 4 cents. Got $4 off of it. Way to start the road to $1 million. Woo! Alright, before we continue with the CLS cash secured puts, we want to head over to bar chart, kind of take a look at what the expected move is going to be for this stock for this week. You can see here with an expiration date of this Friday, January 9th, 4 days to expiration, we have a price of $341. The expected move is $15 up or down. And the lower price is $284.23. So ideally, we're going to sell a cash secured put below this amount if we can, and so hopefully we get a little bit of premium at that point as well. So let's go back to our Fidelity screen to go ahead and sell that cash secured put. Alright, we're back here at the Fidelity screen. Remember, we're looking to sell strike price below 284, around 284. We can see here we can get approximately $300 premium for selling this strike price. but we can go one down just to be safer and sell it at the 20 delta, 19.83. So let's go ahead and sell that, but we're going to, and let's go ahead and sell this call, or excuse me, sell this put. We have quantity of, let's go ahead and sell 3 puts at this price. Pretty conservative. Don't mind going a little bit higher. And we have an order type of limit. Limit price is going to go at the midpoint, so 235. Bumps it up a little bit. And we have a January 9th expiration, 282 strike, below our expected move. And again, time and days force, so let's go ahead and switch this to 2. Alright, so we have Celestica. We're going to go ahead and create this ticket for this particular stock. So as you can see, it's trending up now. Ever since we looked at it, it's been going up a little bit higher and higher. So we want to make sure we're capturing as much premium as we can at this point. We're going to go ahead and sell 2 at this point to capture all of that premium. And go ahead and put that in for $470. Looks like we're going to be okay to sell this. Midpoint price is a little bit lower, so it's going to be closer to $460. And place that order. As you can see, we're already up $1,200 today. We have $254,000 in this account. This is the account that we hope to grow to 7 figures. So we have $206,000 of cash to deploy. Before we do that, we have some covered calls that we need to write, both for Hood and as well as for HIMS. So the Hood covered call is expiring this Friday. Looks like it's on track to finish in the money for us. We've already made 37%. Just waiting for that to be a little bit higher, and then we're going to roll those out or sell higher cash secured puts on them. We have 5 HIMS right now currently. At the 42 strike price that we bought it at. So again, waiting for it to gain a little bit more before we roll those out beyond the January 16th timeline. Here we have HIMS trending upwards, so let's go ahead and sell 2 more cash secured puts. Alright, the remaining 2 options that we sold for HIMS were at the 50 and the 51 strike price. So if we're going to sell a call to get that capture back, we're going to want to go down to see which expiration date has those strike prices covered. So we're probably going to sell it at the 50 just because how far away it is. So let's go ahead and get to, this is January 16th. Premium there is pretty low, about $4. Let's go to January 23rd. Ideally you can go as far as 30 days out. I just don't like to hold just in case there's other movement. I can sell quickly. Still want to get a little bit of premium. Here we're looking at $7. It's going up a little bit per contract. Here we're looking at $9. It's about $2 every week per contract. Alright, here we're looking at about $16. So I think this is where we're going to go out and we're going to sell. Alright, and we're going to sell it at our midpoint $18 price. We're going to sell 2 of these at the $50 strike. And we're going to go ahead and capture some of this premium. Let's go ahead and place that order. Awesome. So it looks like we have our price in place. If it goes higher, great. If it doesn't, we would have gotten $36 of premium. It's a dollar cost average a little bit. Alright, as you can see here, our CLS puts were filled at a strike price of $282.50. We got roughly $2.30 of premium from them. It looks like they're trending to be worth a little bit more, so but we'll see what the price fluctuation brings us. We have 4 days to expiration, and hopefully we can continue capturing that premium without actually having to do too much. Alrighty, welcome back. So now that we've actually sold that CLS puts, let's go ahead and enter it into our spreadsheet for tracking purposes. So we're going to go ahead and put in put. We're going to put in 1/5/2026 on 2025. Happy New Year. And cost basis, since this is a put, we don't have a cost basis for this yet. If this was a call, I'd enter the amount that I paid for it here, just so I can get an accurate amount of profit calculation from it. It's going to expire on this Friday, so we're going to do 2026 here. Oops, clicked out of it. Perfect. So we have 4 days to DTE. We can put an exit date here if we get out of it early or just let it expire. And number of contracts was 2, right? And the strike price here was, I believe, 282.5. Alright, so that's going to tie up $56,000, $500 worth of collateral. And then the premium we collected here, a net premium, was $460. So let's go ahead and input that here. And that's 1.63%. So you might think that's actually kind of low, and you probably would be right in normal cases, but however, this is a weekly APR. So if you multiply this by 52, which we can do here, it's this times, say, 52 weeks in a year, times 100, excuse me, it's a percent. We're going to get 84% returns on trading like this. This is why I do weeklies. I get to control a little bit of the narrative. I get to kind of quickly turn around and make some more income that week. I get to get a lot more profit on something that might be as far as a little bit riskier. So as far as this goes, I prefer this method a lot more because it allows me to get those higher returns. Sometimes you'll see this like 250% if I can get a really good deal. As you saw in SNDK, this was a weekly put from 12.1 to 12.5, and I sold 2 contracts, and it was over $1,000 of premium, which is insane for that amount. And I ultimately got 5.4%, which is, again, if we did the same math here, we just replace 138 with L75. Let's do 115, and that's 280% right there. So not a bad return for a week. And if we were able to do as many trades like that, which is improbable, I agree, we would still get at least a decent amount of return. 85% would probably be the average if we were to do something like this over and over again. And so when it gets called away, I can put it in here. I can see it was assigned, sold, expired, or if I rolled it, and then what the dividend was, if there was any dividends. This is the final sale price of the stock. This is the final amount. This is the percent return again, calculated off that, and so we are good to go. Annualized return. This is that annualized return right here, 246% that we just calculated. So all good stuff. And so here we would input this $460 down here. We'd see we've only made, like, for the first trade of the year, first trade of the week, we made $460. We paid interest over the amount that we've borrowed, so $1,000 of interest has already been deducted. However, we have the entire month to cover this interest, plus we're going to get a dividend. Every time we hold cash or sell cash secured puts in Fidelity, they still pay us interest on that cash, so it's not just sitting there doing nothing. So we get an awesome amount of interest from that as well, which is phenomenal. So we have now that, and it's going to pay towards this. Last 3 months of 2025, we made over $31,000. So hopefully we can continue to beat that, and we'll see how that goes. Alrighty, so we're going to go ahead and shift to day 2 here, only because of the fact that I had some liquidity yesterday. So I wanted to make sure that I was able to kind of assign the portfolio stocks that I really wanted to assign, and really just kind of playing off what's available right now and what's kind of trending downwards and where I can put cash secured puts here. So a couple things that stick out to me. Apple's been kind of getting hammered for no apparent reason whatsoever. It's kind of sad, but it's a great stock, but it's kind of going down a little bit, so that might be something that we could potentially move on. Broadcom is kind of getting hit on. Unlike its peers, it's kind of trending downwards, which is kind of interesting, even though they posted record earnings in Q3. And so, again, after that, it's just been taking a beating. So there might be opportunity for some good premiums in Broadcom as well. Other stocks trending down, Iris Energy. It's pretty relatively priced, so that's something that can help fill the portfolio as we run out of cash and some of the larger plays here. Micron's just been on a tear. Can't do anything with Micron. Netflix has been down. There might be some plays here as far as cash secured puts. I would want to see a little bit more as to what's going on with this particular stock. We go to the 5-day. Yeah, it's kind of approaching that oversold territory. So that we like. There is some MACD signals, but nothing that we would say that there's a reversal happening. It sounds like it's going to go further down before it start going up again. And so here we have a few of the other stocks that we like. Seagate's killing it. Oh my god, SanDisk is up 10%, so they're doing phenomenal. Oracle's doing pretty okay. Microsoft is okay. Meta's doing okay. Hood, again, had a really good day yesterday. Kind of got to the point where it would be traded. Was hoping it kept going up north, but it didn't. CLS is down. We traded this yesterday for 282. That we strike this price that you guys just saw. It's down again today. We could play further into it, just seeing if people are taking profits or if something's actually happening with the AI sector, both Broadcom and CLS. I would like to kind of manage the risk here and kind of spread it out a little bit. I don't want to be too CLS heavy in the portfolio, so I think Broadcom might be the way we go for this one. It's a little bit of Apple, and we have the funds to kind of do both, so we can probably sell a couple puts each for this particular session. Alright, here we have the Broadcom options chain. You can go ahead and look at the strike price of where it's trading around right now of 339, so it's right about here. One thing we could go do is go to bar chart and go ahead and take a look at the expected move for AVGO. So let's go ahead and take a look at that. So with the expiration of January 9th, we see expected move of plus or minus 10 or 3%. So here our lower price is going to be around 332 is what we're going to be searching for. So let's go back to AVGO and let's go and see what we can actually buy here. So 332 strike. Let's just do puts. And let's just do 1 week out. A lot better, a lot cleaner. So we see 332, we can sell at 286, capture some good premium. It's at the 29 delta. I would even go as far as going a little bit further south of AVGO for 330. It's just a lot safer at the 25 delta. We don't need to put all of our eggs in one basket, and we can sell a decent amount of premium for both of these. So let's go ahead and do that. Alright, we're going to sell 2 of these. Sell to open, 2 puts, January 9 expiration, strike 330, limit price is 223. We should probably do the midpoint, and that way we can get that $530 of premium, easy peasy. Condition zone, time and forces day. We should be able to see if we should sell this pretty quickly, so let's go ahead and execute this. Alright, sweet, we got the execution in. And once this is confirmed, we're going to go ahead and update our spreadsheet. Alright, now that that stock's sold, we're going to go ahead and update our spreadsheet. We're going to sell a put. Today's date is the 6th. And our expiration is still going to be the 9th. So we're going to have 3 days for expiration. We did 2 contracts at a price of $330 a contract. So that's $66,000 of collateral. Collected $500 and I believe $32 in this one, and we got 1.61%. So similar percentage to CLS. Everything looks good. We have now already cleared $992 of profit this week. Let's go ahead and sell a few more. Alrighty, here we're looking at the Apple expected move, our next stock price. So the price currently is 263. The expected move is upward -4, which is 1.5%. Lower price is 263 is what we want to focus on, so we want to sell cash secured puts below 263 with the expiration date. I'm going to go lower than this because of the expected move in the price. So I think 259 is probably a better price. I think this was just set at the beginning of the week, so we're already touching our lower price, so we can take a little bit more risk actually if we really wanted to, as far as the delta is concerned. But we're conservative in this approach. On our road to $1 million, we don't want to go too fast, too quickly. So let's go ahead and go back to our options chain. Alright, so we're back here at the options chain for Apple. We said 263 would be kind of the lower end of that implied move. We see a lot of volume at that level. I think if we go too far below 260, I think we lose a lot of premium. 262.5, it's pretty decent amount of premium. It really just depends. It's already kind of taken a beating. I think that if we are at the 27 delta, I think we'll be in a decent spot. This is where we can take a little bit of risk, so we can go ahead and sell this at 108 and make sure that we capture a decent amount of premium, but also make sure we don't have risk of assignment. Here we are at the sale at this ticket. We're selling Apple's current strike price is $263. We're going to sell the open and put January 9th expiration at $260. So within that expected move, 27 delta. The current bid price is $104 per share. So let's go ahead and give it a quantity of 2. Again, nothing else has changed. Again, lower on the premium, but it's a safe stock. Apple's good for it, and we're just trying to collect the premium right now, so we should be good. Let's go ahead and preview that order and make sure everything else is good. 260 put, and let's see the bid and the ask price has gone down, so let's go and edit this, and let's change this to midpoint. So we're getting even less now, which just kind of sucks, but that's the name of the game. Let's go ahead and place that order and see how that does. Alright, let's go ahead and update our spreadsheet since that also sold. Go back to AAPL. We sold 2 puts on this. We sold them today. And we're going out to the 9th. Let's drag this down. Let's drag this down. Let's drag. Let's see. This was, I believe, a strike price of $260. That's what we sold this put at. Let's go ahead and drop this down, and then we have $100 in premium. Again, not a lot, but not complaining. Excuse me, we got $200 premium, $100 per contract, and again, lower amount. We multiply this out times 5,200. We'll get 40% returns, so we'll take it. Awesome. Alright. And you can see here that we have actually overcome our deficit, so we've already made more than the interest due this month, so we're basically trading interest free now for the rest of the month. Alrighty, so we can see here we have approximately $32,000 left to trade, so we can see which stocks might be good candidates for that. It looks like a few of the stocks had turned red on us as far as going south for the day. CLS is taking a huge hit. SoFi is taking a huge hit. So SoFi might be a good stock to trade in some of my other brokerage accounts. I might not do it in this one because those other accounts are smaller than this one. This is one of my largest accounts, so I'm going to make sure that I'm protecting it, at least for diversity's sake. So we got Apple in there. We got our we got our CLS in there, which is getting hit, but hopefully it bounces back the rest of this week. Otherwise, we'll just take assignment and sell covered calls on this. The next thing we can do is focus on what we want to look at next. So AMD might be a good candidate. It's now turning into oversold at the RISI, and then it's also looking at the MACD, also going below, but no signals for a reversal just yet. So there might be some opportunity there. We've already sold AVGO. It's doing fine as far as what we sold. It's actually staying pretty flat, so that's awesome. So yeah, so let's go ahead, and I think AMD might be a good candidate here to get into it. Alrighty, here we have the expected move for AMD. So we see that the upper price and lower price is right here. We're going to go ahead and sell below this lower price. Make sure that we have within the implied volatility that we're selling at. Currently it's at 217, so we need to be below 212. Alright, here we are at 212 for AMD. We're looking at $213 premium. It's a 29.30 delta. Makes a lot of sense. We could go below this, but I think we'll be safe at the 213 delta given where the strike price is now. Ultimately, it's below the actual implied volatility. And again, if we get signed at the end of the week, we can always make a change there. So let's go ahead and sell this. Alright, January 9th, put, sell to open. Quantity is going to be 1 here. It's kind of the funds we have for this currently trade, otherwise we would do multiple of these. Let's go ahead and go to the midpoint. It's already dropped a little bit, so let's go get that. So let's go ahead and keep updating that. Alright, let's go ahead and place that order. So I got a little bit of it back, and it got filled at 219. That's awesome. Let's go ahead and add that to our spreadsheet. Alright, let's go ahead and update our AMD stock right here. Gotta put this 16, 26. 9. Drag this down. We sold one stock of this, and it was $219. I believe the strike price was. Drag this down. Drag this down. So we got a percent back here, so it's 52% for the year. We'll take it. Percent a week for 3 days of work, not bad at all. I'll take that any day of the week. So we did pretty well in AMD here. As you can see, $1,400 so far for this week, pretty much at the average of what we normally average, and we're going to continue going. We have 2 more stocks to sell. Alright, here we have iron. Iron is actually at a lower price of 44.42 for 100% implied volatility, so the premium should be a little better. The expected move is 8%. The current price is at 46.25. So we're going to have to sell something below 44.42, but I have a feeling we're going to go even lower, just given how we trade. And let's go ahead and take a look at the options chain. Alright, so here we have 44.42. So we're getting about $100 at premium for 44.42, but it's a 32 delta. I don't like it as much. I think it's just a little high, so I'm going to go a little bit lower than that. I'm going to try and get something closer to. I'm going to go all the way down here, because iron's kind of known to have a little bit of fluctuation, and we want to protect ourselves. Alright, so I think we might actually be able to get like 2 stocks out of this, or 2 contracts out of this. So let's go ahead and put in a quantity of 2. Strike price is $42. The limit price is going to be the midpoint of 54 cents per share. We're going to get $106 for these 2 contracts, and we'll see how we do. So let's go ahead and preview this. Let's go ahead and sell to the open, and if it fills, we can go ahead and update, which I think it will, because last was 56. This should have filled pretty quickly. So let's go ahead and make sure we got this in. Let's go ahead and wrap up here, guys. We have iron in here for today. We're going to have 3 days entry as well. We had 2 contracts here, and we can see that we had a return on investment for 2.57%, pretty much as we expected. Our total profit for the week is probably going to need to be updated, and we made $1,500 in 2 days, and literally like probably 10 minutes is probably more accurate, minus CLS, but we pretty much did this pretty quickly. If you guys have any questions, drop them in the comment below. Thank you for watching. Please continue to subscribe if you want to see the journey to $1 million. Let's see how far we can get. Please subscribe, and see you in the next one.